All right. Hi, everyone. Hello, everyone. Thanks for tuning in to our Market Watch episode 20. So for this particular episode, we are going to talk about something very, very exciting, and that is about options. Okay, so something very exciting just happened, like over the last 1 hour. I actually invited, two of our co-founder from Ultimate Investing, which is Paul as well as Ivan, to share their view on whether FA is better, which is fundamental investing is better, or technical analysis is actually better. So we have just actually concluded maybe about 20 seconds ago. So that's why actually for tonight, for this market watch, we are a little bit slightly later by about 1 minute. So I hope you guys are still over here. So if you're watching this right now, if you're watching this right now, can you just type in hello? Just type a hello inside the chat so that I know that you're actually watching. And of course, don't forget to actually help us to hit the thumbs up button as well as the love button, right? So that we can actually reach this video to actually more people as well. Hello, Lily Roof. Hi, Jackson. Hello, Han Hawk. Yeah, wow, a lot of familiar names. I know a lot of you just jump over from the previous Zoom, to this Facebook. Hello, hi, Celine as well. So, yeah. So very, very, very exciting. So like I said, we will be starting in maybe about 2 to 3 more minutes. So let's have more people to actually join in. I know some of you, probably you need a toilet break. Probably just came back. Yeah. So no worries. We will be starting at about 9:05. Yes. Hello, Nicholas. Long time no see. Yeah. Yeah. When you meant long time, I guess you meant like a couple of minutes. Jackson is right. FA must be good first, then look at TA. Yeah. So let's discuss this later on. So of course today the topic is going to be how can we actually utilize options. And for some of you maybe started off with fundamental analysis of value investing. Some of you probably came from a forex background, or you have been doing trading, or you're just being fascinated by people looking at candlestick and things like that. So that was how you actually got started. And then recently, I know a lot of people have been, this term options is getting more and more popular. All right. So again, today we are going to dive into this particular area. So I'm going to share with you some of the pros and cons of options, and also how do we actually utilize it properly, correctly, in order for us to actually generate the returns that we are actually looking for. Yes, hello, Colleen. Yeah, for those of you who are here, just help me to type in a hello or hi so that I know that you are watching this. Hello, Liang Xia. Hi, Evelyn. Hello, Ivan Law, all the way from Australia. And it's like 11 p.m. in Australia. Yeah. So very, very interesting. Recently, I was just looking at one of the conference, and one of the speaker from Perth actually mentioned that in Perth, they actually have zero lockdown. Technically, Perth, for the past 1.5 years or coming to 2 years, there's like totally no lockdown at all. Or rather, I would say there's also zero cases. So that was something that I'm like, wow, I didn't know that. I mean, we have heard that, for example, in Sydney, in Melbourne, there have been lockdown and things like that. But I didn't know that actually Perth was totally safe. So much so that like they can have an event of like 30,000-40,000 people in a stadium. Nobody's wearing the mask. Everything is just as per normal. So one thing that I realized that the government has done really, really well for Perth is really about restriction. So ever since COVID started, they actually restricted the people from going out. So if you are, for example, some of the people, let's say you're from Singapore, but you migrated to Perth. So maybe you wanted to come back to Singapore to visit your relative or your friends, but the moment you actually apply to come out, they will ask you, why do you want to come out? Pretty much they will block you. They will not allow you to come out. And of course, they are also restricting people from going in as well. So which means that, technically it's like on its own, they're actually being, maybe we can say in a nicer word, they're being quarantined on a on a state level, or yeah. So pretty interesting. Pretty interesting. Yeah, a couple of 4 days lockdown in the last 2 years. Yeah, so it was like really just a short period. Yes, hello, Li Qiang. Can go out but cannot come back. Interesting. Yeah. Oh yeah, Ivan is from Perth. That's right. Yeah. So pretty much you will not want to go out because the moment you go out of Perth, you will probably have problems going back to your Australia home as well. Anyway, I think let's get started. So allow me to bring up my screen. Okay, so just now, as I've mentioned today, very, very exciting. We have, something really, really cool to share with you. So let me bring up my PPT first. Okay. All right. Sorry, just give me trying to find my slides. Okay. 5 more seconds. Okay, that's right. Share. Oh, yes. All right. So, yeah. So, thanks everyone for joining in tonight for our Market Watch episode 20. As per usual, today we are going to have a special topic for tonight. And of course, as per usual, I will be sharing with all of you the short-term market direction. And last but not least, we are going to have our opportunities, and we're going to end off with our Q&A as well. So I think this is the format that, last week we did like a 1 hour Q&A. So this week we're going back to our normal format so that we can have a little bit of structure when it comes to our market watch. So yeah, this is basically the 4 key agenda for tonight. Okay, what's my options? So yeah, there's a bit of pun over here. Short-term market direction, opportunities, and last but not least, Q&A. And as per usual, we are going to have our disclaimer. So whatever I'm going to share with you today is purely my personal analysis and of course my own research. So please do your own due diligence when it comes to investing, especially you have to understand that investing definitely comes with a risk. All right, so make sure that you actually understand what you are doing before you actually go into your trade. Yes, with that, let's talk about our topic of the day, and that is on options. So we all understand that options, okay, it can be very, very powerful. I think recently I have been actually putting some of my results, okay, from those stocks that I actually recommend on our market watch. Okay, so just to name a few, for example, Netflix, and as well as TSM. I think these are the two trades that has given me very, very high ROI just over the couple of months. I think 1 month. Okay, so later if there's time, I'll also be sharing with all of you, what's that and also how I actually do my trade. But anyway, just to share with you is that options, it is a double-edged sword. So which means that yes, you can generate very, very high returns, and at the same time, if you are not sure exactly how to do it, it can also hurt you in a certain way as well. Okay, so it is very important for us to know exactly how to use it well. Okay, and most importantly, use it safely. So I just give you a scenario over here. In fact, a lot of things in our life, you realize that it's also double-edged. So for example, over here, the rice. Rice gives you energy. Okay, if you agree with this sentence, can you just type in rice, R-I-C-E? Okay, if you agree that rice gives you energy, just type in rice. Okay, this is not a trick question. But one thing you also have to understand is that when you eat too much rice, it will also make you fat. Okay, basically, it give you fats. And also, for those of you who are a little bit more sensitive, okay, especially if you are, having some insulin issue or deficiency, it can also trigger diabetes. Too much rice. Of course, we are talking about people who are eating too much rice. So again, we can say that the rice can be a good thing, but at the same time, yeah, eating too much rice makes you sleepy. Exactly, but it makes you fat and give you diabetes as well. So does it mean that we should stop eating rice? Again, you realize that everything is all about being having the right balance, okay, and eating in moderation. So when it comes to investing with options, okay, does it mean that since it is a double-edged sword, we should stop using it? I would say that no, okay, but rather how should we actually approach this? I would say this is my format okay. Our job is to amplify the pros. Okay, that means whatever good things that you can actually get from options, we want to amplify it and make full use of it. And in terms of the cons, what are the downside? Basically, what we want to do is just neutralize it. Can we totally remove it? Maybe not, but we want to reduce the damage coming from the con. So here's some of the pros and cons of options just to share with all of you. So let's start off with the pros first. So we all understand that options allow you to have amplified returns. Okay, so just to share some of my trades. Okay, so for my TSM, I got like a 700% within like 2 weeks of holding it. Okay, so if you don't mind 700% of within 2 weeks, can you just type in TSM? And for my Netflix, I gotten over 200%. Okay, again, this is like in about 1 week plus. Okay, so again, these are super amplified returns, which is amazing, which is also why options allow us to actually get that. And the second pros, I would say, is the downside, which is limited downside. So there are some of the trades that I've recommend. I've also invested in it. They are not doing that well. So two of them that I can share over here is Roku, and the other one is what's the other one? Roku, and one more. Okay, I think some of you know. Okay, Roku and okay, I've forgotten what is that for now. Let me just do a check. Yes, Roku and Splunk. Okay, Roku and Splunk. Yeah. So right now, both of them are slightly down. Okay, and on the options, it is showing like a minus 30%, minus 40%. Yes, thanks, Celine. Right. So for my Roku and Splunk, you have to understand that the worst it can go is 0. So for example, if I put in $1,000, okay, the worst that I will lose is $1,000. When you are using the right option strategy, that you will not lose more than what you have actually put in. Okay, so again, over here, I also have to clarify is that options, there are many strategies. Some of the strategies, the downside can be rather huge. Okay, but if you are using a simple option strategy like buying call and buying put, okay, something that I personally use pretty much all the time, okay, just buy call and buy put, it has limited downside, which makes it so powerful. Okay, which makes it so powerful. So I'm not referring to any of the, selling options or butterfly or strangle or shredder or, whatever, iron condor. Okay, I'm just talking about simple buy call and buy put. It has limited downside. And why do I say that options increase your percentage of winning? That is also where we have to understand that in options, there are many different strategies. So when you're using strategies like, for example, selling a put options, okay, selling a put options, you can actually make money 2 out of 3 direction. Okay, so let me explain exactly what it means. So for example, today, if I sell a put options for Apple, so if Apple shares goes up, I will make money from the premium. If Apple shares stay flat, okay, I will still benefit from the premium. Okay, I will still be profitable. The only downside is if Apple shares were to drop a certain percentage. Okay, so something you have to understand, even if it drops a little bit, I will still be profitable. So that is actually the one of the pros of using this particular strategy called selling put options. Your percentage of winning is actually higher in that sense. So that pretty much sums out the pros and pros of options. Now let's talk about the downside, which is number 1, time decay. So what is time decay? So one thing that a lot of people love when it comes to buying stocks, okay, is that people always tell you, as long as you don't sell away, you will not lose money. So which means that, for example, let's say I bought into AMC, okay, something that is super volatile. So maybe I bought it at the highest point. I bought it at, let's say, I don't know what's the price now, but let's say I bought it at $50. Right now it's at $10. Technically, on paper, I'm losing $40. But the good thing about buying share is that as long as I don't sell it away, technically it is just a paper loss, which means that maybe 2 years down the road, suddenly, Wall Street bet comes in and the price shoot up to $100. Then I sell it away. Okay, I will be profitable. But when it comes to options, there is a time frame. There is a time expiry. So what happened is that, okay, for example, if I were to do a buy call, means that I'm expecting the price to go higher. So if, let's say, within the time frame of, let's say, 3 months or 6 months or 1 year or 2 years, depending on how long you actually go for, if the price didn't go up, okay, what happened is that you are potentially going to lose like everything of the premium. Okay, so that is something that is the downside. So that is time decay. And the second thing I would say is that options is definitely more complicated than stocks, because of all the different strategies that you can actually do with options. Okay, and the third cons I would say is if you are using margin. Okay, if you're using margin on options, so it can be relatively dangerous, especially if you're new to it and you basically just jump into it. Potentially it can wipe out your account, your whole account overnight. That is the kind of risk that I'm actually talking about. Okay, so if you understand what I've been talking about so far, can you just type in 555? Just type a 555. I just want to make sure that you guys are, are still here. A little bit technical, I understand, right? And of course, while you guys are typing in 555, for those of you who just came in not too long ago, don't forget to give us a thumbs up, give us some love, so that this video can be actually reach out to more people as well. All right, I'm watching the thumbs up as well as the like. Okay, let's move on. Right, so let's look at the pros first. Okay, remember what we want to do is to amplify the pros. Right, so let's look at these three. A lot of people will be looking at, so based on the pros, should I apply using fundamental or should I apply using technical? All right, so you realize something is that, for example, if I want to have amplified returns using options, can I apply FA to it? The answer is yes lah. Basically, I only look for good company, okay, and then I use options. So you can see it becomes more powerful. But at the same time, can I use TA as well? Can I use trend to help me to determine the direction, to determine the strength of the buying and selling before I use option? The answer is also yes. So irregardless whether you're using FA or TA, I would say that this is definitely a plus point for options. And in terms of the downside, okay, I would say that all of these are very, very much applicable lah. So whether you're using FA or you're using TA, I would say that options would actually help you. Okay, options can actually help you. But rather, I just want to point out to the downside. Okay, I just want to point out to the downside. So let's look at this thing called time decay. So one of the things that a lot of my friends used to actually tell me is that, Bowen, I understand that options has time decay. So which also means that you have to be correct, okay, within the certain time frame. Yeah, so that was where I definitely agree with them. And that is also the reason why I would say that if, let's say, today you only have FA knowledge, okay, and then you combine it with options, it can be less powerful. It can be less powerful. So one of the things, in order for you to actually, I would say, remove or neutralize these cons, okay, is to combine TA with options. Okay, is to combine TA with options. So this is something very, very powerful. So another one that I will want to emphasize is that for those of you who are new to options, you might find that options can be a little bit complicated, especially with all the different strategies. So what I would recommend for all of you who are new, okay, and even if you are already somebody who have been investing, okay, for a period of time, I would also encourage you to just focus on one or two powerful strategies, option strategies, okay, instead of focusing on too many strategies. Okay, this is my personal point of view. I've personally tried out many different option strategies, and I can actually tell you that something that I like the most is the most basic, which is buying call and buying put. Okay, buying call and buying put. As straightforward as that. And last but not least, okay, one of the cons is that on margin, it can be relatively dangerous. So if you are not having the right portfolio sizing, so for example, if you have $2,000 and then you go into options and you're not sure exactly what you are doing, I can tell you that you can lose that 2,000 literally overnight. Very easy to lose. Can you make money? Can your 2,000 become 4,000? It can be fast also. But what happens is that you have to understand this. For example, when you're using margin, you make money fast. Okay, so your 2,000 can become 4,000. So when you're happy, right? Okay, and then you do it again. So 4,000 become 8,000. Okay, but one thing that you wouldn't realize is that, okay, because you are so confident that you are able to make fast money, you will continue to double down. So 2,000 to 4,000, 4,000 to 8,000. And what you didn't realize is that as long as there is one big movement that go against you, your 8,000 can literally go to zero immediately. Okay, so it's the same thing. Whatever can give you money fast, it can also take money away from you very, very fast as well. Especially if you're on margin, definitely something that you have to take note. Okay, definitely something that you have to take note. All right. So here's are some of the frequently asked questions that I often get. Number one is that I heard scary stories about account being wiped out overnight using options. Is it true? The answer is yes. Okay, the answer is yes. And pretty much, okay, almost all the time, these people, they are using a combination of selling options and buying options. Okay, a combination of selling options and buying options. So one thing to assure you is that when you are buying options, okay, you will not use the margin. You will not use the margin. I repeat, when you're buying options, you will not utilize the margin. Okay, the moment you go and sell an options, immediately, okay, because of the way it is being structured, most of the time you will be using up the margin, okay, that the brokerage actually allows you to do. Okay, and a lot of the people, because they don't really understand how selling options work, so they thought that they are relatively safe, but when the stock price drop a certain percentage, then they realize, hey, how come my capital dropped significantly? Okay, and for those people with the account being wiped out overnight, you know, like they see like 100,000 losses or in one night, okay, those are all definitely selling options. Okay, next one. How do I repair my options trade? So if you are asking these questions, okay, so it's a little bit like if you are learning how to ride a bicycle. Okay, I think first thing first, let's just focus on how to ride the bicycle. Maybe you can move on from a small bike to a road bike. You know, I think repair a bicycle is an additional skill set. So for those of you who are new, why not just focus on, you know, getting your bicycle to move and learning how to ride the bicycle safely. Okay, repairing an options trade, to me, this is already a more advanced option strategy. So which personally for me, why I personally don't go into the advanced options is because number one, okay, other than you need to know how to use it wisely, okay, the right strategy at the right time. The second thing you need to do when it comes to advanced options is that many times there are certain repair trade that you have to do. So again, in order for you to do the repair, you have to have a good understanding on how the options are actually working. Okay, so for me, I'm not saying that I do not repair my trade, but rather I make sure that when I go into a single trade, I understand what is my game plan. Okay, so for most of my trade that I go in right now, okay, those that I'm using a short-term trade, what happened is that literally I'm willing to lose the full premium that I paid. I'm willing to have 100% loss. Okay, which means that I don't really have to repair. If it drops lah. Okay, but if it goes up, okay, I will have a way of collecting profit as well. So you need to understand what is your game plan. Again, like I said, for me, I like to keep it short and simple. So this is the keys that I like to use on my options. Later on, I will actually cover some of the questions that you guys are actually sharing. So for Angus, if you have any questions, okay, right towards the end, I will be actually sharing with all of you. Next, is all option strategies created equal? You have to understand that the answer is no. Different option strategies cover different areas. So I think, yeah, since we are on this topic, so maybe I'll just cover this as well. So Angus is asking this question: why are most gurus and option courses out there are more on the sell option strategy? I'm not sure whether is it most or all, okay? But I just want to share is that many of the option courses out there, I know that they do also share on buying options. But I do have to admit that selling options is a lot more sexy. Okay, it's a lot more sexy. Why do I say that? It's because when you're selling options, you get to collect premium. So it's like a cash flow. Everybody loves cash flow. Everybody wants to have, you know, $1,000, a few $1,000 coming into our account every single month. So again, I am not saying that selling options is totally evil, is totally bad. It is just that pretty much when you're selling options, the capital that you need is relatively large. Okay, I would advise that, you know, if you want to sell options, your account has got to be at least 20,000, at least 20,000 in order for you to do a relatively safe selling options. Anything that is lesser than 20,000, personally for me, I would advise you to do buying options. Okay, so that's my personal take. So for people with huge portfolio, I will actually share with them how do you use selling options to generate consistent cash flow for your retirement, etc. You know, but for people with, let's say, $2,000, $3,000, $5,000 with a small capital, what we want to focus on, not so much of, let's be realistic, let's not focus on cash flow when your capital is small. Let's focus on capital gain. How can we have the lowest risk and generate the highest return using the right option strategy? All right. So again, that I think that covers this question. Is all option strategies created equal? The answer is no. Some strategies focus on capital gain. Some strategies focus on cash flow. So again, it doesn't mean that the cash flow is lousier, the capital gain is bigger. It also depends on your, number one, your cash, how much money you have. Number two, what is the risk appetite that you are able to take? Okay, so again, like I said, you have to understand about you, okay, and you have to apply it to the correct option strategy. So I think these two comes in really hand in hand. Next one, can someone without any investment knowledge pick up options? The answer is definitely yes. Okay, the answer is definitely yes. As long as you actually have a structured way of actually doing it, I think you can actually, I wouldn't say master, but you will be able to do it in a safe and proper manner. I would say with at least maybe if you actually go through, for example, our students who actually go through our 2 days classes, pretty much they will know how to do it, how to execute it. But to really understand it, I would say that probably they have to come back another session. Okay, so at least 4 days, 4 days of training, I would say you will be able to pick up options. All right, next one. Okay, let's move on to the short-term market direction. So very exciting. All right. So if you're learning something so far, can you just type in STMD? STMD, what does it stand for? It stands for short-term market direction, STMD. All right, later I will cover the questions that you guys are typing, so no worries. You can keep it to the Q&A later on. Okay, if you are still here, type in STMD. STMD. That's great. Okay, so first of all, this is something that I love to do every week. Okay, so let's look at the market for next week. So again, like I said, the S&P 500 are very predictable, which is great. So over the last couple of days, the stock market has dropped. Very happy for it. Okay, because remember, in order for the stock to go up higher, it has to drop lah. Okay, it has to drop. So with the drop that is happening last Friday, I would say Monday is important. Monday, let's just monitor and see how it goes. Okay, I would say that the stock will actually again get supported at our EMA 50 line. Okay, the stock will get, the S&P 500 will get supported at the orange line before bouncing back up. But again, we are not going to make an immediate call. So what you want to do is, after it has touches the orange line, wait for the next candle. So for example, if let's say Monday, tomorrow when the market is open, it drops, okay? We are not going to do anything yet on Monday, and let's wait for Tuesday. So if Tuesday you see a green candle coming back up, yeah, so that would be a good entry for those of you who want to jump into some of the S&P 500 stocks. Right, and of course, if you look at the Dow Jones, okay, the Dow Jones has actually taken a relatively larger dip. It has already fallen beyond the EMA 50 line. Okay, and we can actually see that the Dow Jones has the habit of actually going beyond the EMA 50 line. So again, nothing too much that we have to worry about. Okay, I would say that just be a bit wary. So you can see that the candle last Friday was pretty huge for Dow Jones. I believe one of the key reasons is also because of Apple. So Apple also contribute a fair part of the Dow Jones 30. And we know that Apple has got a relatively bad news because of the lawsuit that is going on. So that also pull down the overall Dow Jones. Let's see if Monday market would actually be a little bit more bullish for the Dow Jones. But other than that, I do see that it is being supported. I don't foresee that the S&P will rebound and the Dow Jones will drop. I still see that they are all going to go in the same direction. So again, this one, let's just observe and respond, okay, accordingly. Now for the Nasdaq is a little bit delayed in that case. The tech sector is a little bit more bullish. You can actually see that even though the Dow Jones and the S&P has came down quite a fair bit, the Nasdaq is just slightly down. Okay, the Nasdaq is just slightly down. So I mean, if let's say next week, I think if there are more downside coming from the Nasdaq, this is something for us to take note. Again, for me, I don't like to go in when the index is going down. So if let's say you are planning to enter into any of the tech stocks, probably I will wait. I will wait first. I will not go in at the current point of time. Okay, I will not go in at the current point of time for any of the Nasdaq company. Okay, or rather tech company as a whole. So this is just my take. Again, is this down? Is this pullback a bad thing? Again, I see this as a good thing. It has to come down before it can actually go up even higher to all-time high. All right, and it has been proven many times that this happened again and again and again. So let the market movement do the job. So this is basically my take. I am having a bullish take, a bullish take for the S&P 500 as well as the Dow Jones, at least in the short term. Right, but again, like I said, I will not go in immediately. I will continue to monitor at least Monday as well as Tuesday. So the earliest I will actually jump in is on Tuesday. The earliest I will actually jump in is on Tuesday, right? So this is basically what I will do. So for those of you who understand what I'm sharing, if you have been following us, you should be able to understand. Can you just type in ABC? ABC. ABC means that you know exactly how to enter. So it's as easy as ABC. So if you understand how to trade based on next week portfolio, based on next week forecast, can you just type in ABC? Wonderful, wonderful. All right. So for those of you who are yet to join our, who are new, okay, if you have yet to join our Telegram, let me just do a quick advertisement. Now we are about half an hour. Okay, as usual, I like to end this at half an hour, but I always drag until 1 hour. So I would say that now maybe we are in the halfway time. Yeah, half time. Right. Okay, let me just hide this. Okay, yeah. So allow me to do another quick advertisement. Do a quick advertisement, right? So I mean, a lot of people have been asking me, so Bowen, can you share a little bit about the courses that you all conduct? Okay, because recently you have not been doing your webinar and things like that, right? So yeah, we will be conducting our next crisis webinar. Later I will show the date, but basically in our UI, right? Okay, so for those of you who have been wondering, so what exactly does UI teach? Okay, so what we do over here, very simple. We combine these 3 areas together. In fact, 4 areas together. Okay, we combine fundamental analysis, technical analysis, options, as well as portfolio management. So we call it the UI boat system. Okay, so it's just like this boat. You need to have these 4 components together. Okay, then your boat can actually move safely, okay, towards the direction, which is your financial freedom. So you can see that these are some of the things that we cover, from the fundamental to the technical to the options to the portfolio management. So we have an online courses that will be doing this. And at the same time, we will also be conducting a 2-day classes, okay, to share with you the whole UI board system. So this is something that we do for our students as well, okay. Our students are able to do our 30 days investing challenge, okay. And this is one of the 30 days challenge that we did. We managed to get like 30% within 30 days. Okay, so with the UI board system, one of the things that you can actually expect is that you will be able to learn how to generate consistent profit, okay, using this system, right? So this is something that is very unique. So you don't have to wait for 3 months, 6 months, or 1 year to see profit. If you know how to do the short-term trade, you can actually see profit in a very short period of time. Right, so this is the webinar that I will be conducting on the 14th September and 26th September. We will be putting up the registration link inside the Telegram, so I will not be sharing with all of you here. We will be putting it inside the Telegram lah. So be sure to actually join our Telegram if you are interested to actually join our Crisis Income Formula webinar. Again, like I said, just to share with you, whether or not you sign up for our courses, it doesn't really matter. But for those of you who have not yet to actually watch this webinar, okay, it is a 2-hour webinar. Do join us, because I will be sharing with you a lot of useful information, as well as how do we actually prepare ourselves for the big crisis that I expect it is going to come probably in another 6 months or 1 year. Okay, so how do we actually prepare for it? Very importantly, join us for this webinar. All right, so that is the quick advertisement that I have for all of you. Okay, so here comes the opportunity that I have for next week. Okay, very, very exciting. First company, Tractor Supply Company. Oh, interesting name. Okay, TSCO, ticker symbol is TSCO. So as you can see, this company, the reason for entry, as you can see, that it actually broke the all-time high. Okay, it actually broke the all-time high. So you can see that this stock has been going up, then consolidating, okay, moving upwards, consolidating, and right now, okay, it has just broken the all-time high, which again, it is a very, very exciting entry for us. Okay, it is a good entry for us. Okay, especially we can see that last Friday it has a gap up. Okay, and the price is still maintained very, very strongly. So this is the first company that I just wanted to share, TSCO. Right, the next company is an education tech company. Okay, education tech company. So this is basically a SaaS company, except that they basically help university to turn their courses into online courses. So they basically create platform for universities. Okay, to actually convert their their staff from offline to online. I think this is also very, very powerful, especially with COVID. I think many universities are actually affected. So some of them, they are wondering, how can I actually move my whole training, my whole syllabus, my whole database into an online courses? So the 2U, basically, this is a software that enables the university to do that. So one thing you can see that this stock has been consolidating for a relatively long period of time, since April all the way until now. April 2020. So that's like almost more than a year. Okay, so right now, okay, you can see that the price is very close to the support line. It has not touched us yet, so don't need to kanchong to go in. Don't jump in so fast. Okay, wait for it to come down to around $34. Okay, somewhere around $34 or slightly below at the yellow line. Okay, again, when it touches the yellow line, don't go in yet. Wait for it to bounce up before you enter. Okay, wait for it to bounce up before you enter. Just like the basketball. It has touched the floor, bounce up, then you enter. So this is the second opportunity that I have, which is 2U. The third company that I have, today very exciting, is Best Buy Co. This is a retail stores. So as what one of our co-founder Ivan has mentioned, retail industry has actually picked up. In fact, because of COVID, those that are not able to change or move together with times, they are actually being removed. But those that are being able to adapt and move online, actually they realize that they are doing even better than before. Because what happened is that, for example, Nike, in the past, Nike actually has to go through the retailers, okay, or distributor to distribute their Nike product. But what happened with that? Now everybody is online. They just need to create their own Nike stores. Okay, they have their own website. Basically, they can deal directly to the customer. So that actually removed the middleman. Okay, which a lot of there are actually other listed companies that just act as the middleman for all these big brands, right? So this company, I think they are having some challenge. So we can see that actually the retail sector is actually doing well. Another key reason is also because of the stimulus package that the US government has been giving up over the last 1 year. So actually the US citizens, they are relatively rich, cash rich. Okay, so where do they spend it on? They spend it on all this stuff. So you can see that right now this stock is being supported at the EMA 200 line. Okay, so I would say that this area is a very strong support for this company which is BBY Okay, BBY. So remember, this is BBY 2B. If you accidentally put in BBBY, then that becomes Bed Bath and Beyond, different company. Okay, so BBY, 2B only. Okay, this is Best Buy. So this is the third company that I have. And the last company I have, well, I'm sure you are very familiar. This is Visa. Okay, so as you can see, Visa, very, very solid company. Every time you go online, you go to your Shopee, how do you swipe? You use credit card. Okay, nowadays when I go out, I try not to bring cash. Okay, if it's possible, I'll use card. Again, the retailer does not charge me more when I use card. So just use it. Okay, just use it. Okay, I think nowadays, even for my parents, they start to go online shopping and things like that. Online payment becomes more and more normal. It becomes a norm. Okay, it becomes a norm. So I would say Visa definitely with the largest network around in terms of this space, they will definitely benefit from it. Yep, so as you can see, previously it has came down quite a fair bit. I mean, this stock has been very, very bullish for a long period of time, okay, because of the network effect. Okay, but right now, because of the pullback, I would say that the EMA 200 is a strong support line. So right now, as you can see, the candle is still relatively red on the final candle last Friday. So maybe again, like I said, wait for 1 or 2 days. Again, this Visa is part of the Nasdaq. So maybe you might want to wait for Tuesday, okay, or Wednesday before you decide whether to jump in or not. But again, like I said, just observe and respond accordingly. Right. So this is the 4 company that I have. For those of you who managed to capture this 4 company, can you just put it down inside the comments so that we can actually share with the rest as well? Yes, like what Dino mentioned. Can you please repeat the symbol? Okay, actually I forget what's the 4 company. So maybe for those of you who managed to capture it, can you please help the rest to share it? Okay. Okay, so right now what I'm going to do is I'm going to open up for Q&A. So if you have any questions, okay, now is the time for you to ask me. Thank you so much, Celine. We have BBY, 2U, V, and the first one is Tractor Supply. Yes. Thank you so much, Sandra. Tesco, Tractor Supply, 2U, BBY, which is Best Buy, and Visa. Again, some of them, okay, don't need to jump in immediately. Wait for a while, monitor it. Again, just to share, all of these are short-term trade. Okay, short-term trade, not long-term trade. Okay, everything I do right now is short-term trade. So something to take note. Okay, great. First question from Bonnie. What is the duration of your buy call? Okay, so recently I'm using a new strategy. Okay, so my new strategy is relatively short term. In short, I use less than 2 months. Okay, I use a call option and put option for less than 2 months. Again, there are a few criteria that is very, very important when it comes to doing this kind of short-term call. So you have to actually take note. But for this kind of short-term, right now, I'm actually using 2 months or less. Okay, 2 months or less. That's great. Thanks for sharing. Thanks for sharing. I can see a lot of you have been posting. Yeah. So if you have any other question, okay, can you continue to post it here so that I can actually share. Yeah. Yeah. In fact, just now I saw a crypto expert. Okay. So let me see. Is our crypto expert still here? Yeah. So Leslie, right? Leslie is actually a friend that I know, and he actually runs a community of crypto. Okay, and his community I know is freaking huge. It's freaking huge. So I think last week or 2 weeks ago, some of you are asking me, so Bowen, can you share more about Binance and things like that? Okay. So I think the best person to answer is not me. Because my answer will be I don't know. Right. So I think for next week Market Watch, okay, if Leslie is able to make it, okay, let me invite the expert to come and share with all of you, okay, more about the crypto space, as well as if let's say you are invested using Binance, what should you do? Okay, what should you do? Okay, I hope Leslie is still here. Then he'll be like, oh, I need to block out my next Sunday. Okay, let me look at some of the other questions. TSCO all-time high. Do we wait for retracement? The answer is no. Exactly because it is all-time high. That's why I enter. Okay, exactly. It's because it is all-time high. That's why I enter. Let me share with you. Very, very interesting. Okay, now that you are talking about this, see, I have my chart. Let me share with you a company that is constantly at all-time high. For example, let's look at Facebook lah. So you can actually see that previously, right, this was the all-time high. Okay, can you see? This was the all-time high lah. Okay, let's look at this. So this was the all-time high. So after Facebook actually broke the all-time high, you can see lah, this one quite tricky lah, came back down. Then after that, it continues to go higher, right? Okay, continue to go higher. And then where is the next all-time high? So let's say now I use this point as the all-time high. Okay, so same thing, you can see the moment it broke up, actually it is a very strong buying signal upwards. Okay, so especially, right, the longer it consolidate, okay, the longer it consolidate. So for example, over here, you can see this particular area it has been consolidating for a long period of time. The moment it breaks above this consolidation, you can see the stock just chung. Okay, I have you to see lah, about 70% for Facebook lah. If you entered, okay, based on this all-time high at this point of time, okay, 70% from May last year until now lah. Not bad lah, 70%. Okay, so again, a stock that has been consolidating for some time, when it goes all-time high, right? Wow, this is like a good timing to enter, in short lah. Yes, Bonnie. Back to your question. Okay, back to your question. 2 months time decay very fast, right? Exactly, it is very fast. That's why, in order when you do such a short-term options strategy, right, the precision has to be good. The precision has to be good. Okay, that's why all of my trade are all very precise one. I will not go in when I am not too sure. Okay, or when the signal is not obvious, I will not go in. Pretty much, okay, as you can see for my recent trade that I did, right, I don't even have to wait until 2 months. In fact, most of them I cut off within 1 month. Okay, even though my options can be about 2 months, but pretty much 1 month, I'm already like getting like super good RI, and then I'll just get out. 2 months, to be honest, is really on the safer side lah. Okay, but yeah, anyway, you can go up less than 2 months. Okay, up to 2 months lah, basically. Okay, Luciana got a question. Since selling options require higher capital, does that mean it has higher risk? Very good question. Okay, so just to explain to you, right, when you're selling options, okay, what happened is that you are promising somebody that you're going to buy at that particular price. So if, let's say, the price dropped below the price that you promised, basically you have to own the share. So the first question that I want to ask you is, when you're selling options, let's say you're selling options for Apple, are you willing to pick up the Apple share? If your answer is yes, you think that Apple is a good price, it is a good stock, you are willing to pick up the stock at that price, then I would say your risk is relatively low because you're willing to hold it anyway. But if you are doing a selling options purely for the premium, that means you find an XYZ company that you don't even know, but the premium is fantastic. And then you go in, and then the price drop, and then you get to collect the share. But you don't even know what the company is doing. Okay, and then the share keep dropping. Then I would say that your risk is relatively higher because you don't have the conviction to hold on to the share. Okay, to hold on to the share. So it's just like, for example, if let's say somebody owes you money. Okay, somebody owes you money. Okay, so the person, you ask the person to pay back. The person say, I got no money lah. Okay, I only got one life. Or I only got one gold bar. Or I only got one antique that I also don't know cost how much. But if you are somebody who knows the price of the antique, maybe you know that, well, actually the antique it costs even more than the amount that he owes you. Then you say, okay, I'll just take your antique. If you never pay me within this 6 months, then I will confiscate your antique. If you know the value of the thing that you are getting, then your risk can be relatively low. Okay, but if you don't even know that this vase, you don't even know the price, then you take, then of course the risk is higher. I hope I explain it in this approach. Yeah, I'm not sure about this. So what is Apple and SE? Okay. Yeah, so meaning selling options will be good if done on a good fundamental company. Yes, exactly. Fantastic. So I wouldn't say that it would be good. I would say that you have to only do a sell option. You only sell options on a good fundamental stock. Okay, only. Okay, yep. Is there any other question? We'll just take maybe about 1 or 2 more questions before we end off our market watch. Anyone have any other question? If not, I will close off this market watch soon. Right. Okay, yeah. Hello, Dino. How do you use vols and smile in your decision if you do? Okay, maybe you need to repeat. Vols, I assume is volume. And smile, I don't know. Is it this smile? Okay, yeah. Maybe we can retype in again. Okay, yeah, inshallah, I don't use volume, I don't use smile in my decision. I look at FA, I look at TA, then I look at options. Volatility. Okay. Yeah. So volatility, yes, I do take a look at it. Okay, but in short, I like to go for company with low volatility lah. Okay, especially when you're buying options, go for low volatility. When the volatility is high, let's say today, wow, the market suddenly big drop, don't do anything. Or if let's say this is a very volatile stock, okay, also don't do anything. Don't do any options on that. I like to go for the very boring stock, the very low volatility stocks. Those are the best. Those are the best. Volatility smile. Okay, yeah. But inshallah, I only go for the super low volatility stocks lah. Yeah, there's a reason for it lah. If you want to make extremely high return, go for the non-volatile stock. Okay, not a lot of people thought you want to make a lot of money, you must go for the volatile stock. Not true. Okay, go for the low volatility one. Those are the ones that make you a lot of money. Okay, do you see Tesla going down now that KT also buy low, sell high? Actually, not true lah. I would say that you really can't tell what KT is doing, and she's holding like so much Tesla. She just sold off a bit, unless she sold off everything lah. Okay, maybe you can let me know. Did she sold off everything? But I don't think she sold off everything. I probably just sold off a portion of it. Okay, maybe she found some other exciting stock that she want to enter. That's why she has to, sell off some lah. It could be also portfolio management lah. Okay, it could be portfolio rebalancing, like what Rachel actually mentioned. Yeah, lor. If she really sold off everything, I can tell you that the Tesla price will not be at this price lah. Yeah, I think she can really move the market one. Okay, so if she really sold off everything, Tesla price should be way lower. Okay, yes, Michael Go. Low volatility give high return. Is it because the winning rate is high? Not true lah. Not true. It's not because the winning rate is high. Winning rate is all the same, whether is it low volatility or high volatility. Okay, but in short, I will tell you the golden answer. Okay, golden answer. When you go for low volatility, it will give you very good return because, the premium is super low. Although the question, a lot of people say, well, you like answer like never answer. Okay, but this is the correct answer because the premium is super low. That's why you can get very, very high ROI. Just a quick question. How do you short an option? Do you buy put or sell? Okay, we buy put. So if you want to short it, if you think the thing is going down, you buy put. If you think it's going up, you buy call. Okay, so very simple. Buy call, go up. Buy put, come down. In short, if you still very confused about selling, about option, overall, still confused about option, don't even think about selling. Just focus on buy call, buy put, buy call, buy put. To make it even easier for you, don't even think about buy put. Don't even think about buy put. Just focus on one thing, buy call. This is what Bruce Lee say one instead of training, I don't know what 10,000 punch, right? Just train the same thing. Just train the same one punch something along that line. Okay, you get where I'm coming from If you can just master one move, you can make money already. Okay, premium low if low IV, need to sell more contract to get the same amount of but more 报价. Also not true This is selling options. Okay, I'm talking about buying options. So opposite of what you mentioned, Oswin. Do you prefer OTM than ATM because lower premium? Okay, this is also a bit of an art lah. You really need to have the experience before you can determine. But normally I will go for slightly ATM lah. Slightly, sorry, not slightly ATM, slightly OTM. Yes, I will go for slightly OTM. Yes, thank you so much, Jackson. Wow, fantastic. This is the best answer that I get. Buy, go for low volatility. Sell, go for IV. High IV. Yes. Okay. How low should volatility be in terms of percentage? Okay. Golden magic number 30%. Anything less than 30% go in. Okay. But I can tell you that a lot of the stock that you're looking at confirm all fail one. Then you'll be like, hey, so should I enter or not? Okay. IV less than 30%. Anything more than 30%. Don't look at it. Okay, any other burning question? Final question. One more question. Okay, 10 p.m. We can end off this. Okay, for those of you who have not given me the thumbs up or love or share, yeah, before we end off just help us to give us a thumbs up or a love so that this video can reach out to more people. Thank you so much, Ivan. Okay, fear not the man who has practiced 10,000 kick once, but I fear the man who has practiced one kick 10,000 times. Very, very true. Okay, very, very true. Yes, and thanks for the love and the like. Wow, suddenly I can see the numbers jumping. Right, fantastic. Okay, yes, okay, yep. And before I end this off, okay, again, like I said, for those of you who have yet to join our community, who have yet to attend our program, I think just now I've mentioned that we'll be doing a preview, a webinar next Tuesday, as well as the following Sunday. I have a good news for all of you, okay, is that again, we are still in the month of giving. Okay, we recently did the 99 special price. Okay, again, the 99 is really a one-off thing, okay? Because that online courses, I'm going to officially publish it. Okay, so previously it's like the pre-launch price and things like that. So this 99 is really one-off. Okay, so if you are thinking of another 99 for the online course, no more already. It's going to be at USD $49, which is still a super good deal. Okay, but for our flagship program, we will have a very special one-off pricing as well. Okay, I can't really disclose so much here because there are people who paid the original price. But if you want to know how much we are actually offering for those of you who have yet to join us, I can actually tell you that these two webinar, it is going to be definitely the lowest price that we have ever offered. Okay, so if you have yet to join us, just come for this two session, either one, okay, either next Tuesday or the following Sunday, and then we will release the pricing, okay, on that day itself. All right, if not, thanks a lot for joining me tonight. Okay, yeah, so these are the upcoming dates for our Crisis Income Formula webinar. If you have yet to join us before, do join us. Okay, we will be putting up the registration link shortly inside the Telegram. So once you're inside the Telegram, you can actually register once it's up. If not, thanks everyone for joining me tonight. Again, appreciate all of you for joining me this every week. So next coming Sunday, we are going to invite, okay, I hope that I can invite the crypto expert to actually come and share with all of you, more about the crypto space. What are some of the opportunities? What are some of the things that we have to take note? All right, so once it's confirmed, I will let you guys know the great news. Okay, but as usual, we will definitely do our market watch next coming Sunday at 9 p.m. So I'll see you guys. Most importantly, stay safe, take care, and see you next Sunday. Bye-bye.